Hello, everyone, and welcome back to our latest episode of Real Take Real Estate with the Joseph team, where we give you our real take on today's housing market and everything to do with real estate. I'm your host, Maddie Maloney, joined by my co-hosts,
Joe Sambert
and Sam Feda.
So today we get to dive into the very exciting topic of jumbo loans. Now, I love jumbo loans mostly because I love looking at the houses. I just love looking at the different kinds of, in the different states, the different kinds of properties that come along with jumbo loans. But we really wanted to dive into, what consists of a jumbo loan, what kind of products are available, and then maybe just a couple of stories about jumbo loans as well. So, Sam, would you like to start off with what qualifies for a jumbo loan?
Sure, yeah. So what exactly is a jumbo loan? It is, a separate loan from Freddie Mac, Fannie Mae. It's not underwritten with their guidelines. We don't have to conform to what, their rules are. And we have a really unique jumbo loan to whereas it's kept in the bank's portfolio. So we don't have to, have it underwritten by a third party, basically. We don't have to have it underwritten for Freddie Fannie's guidelines, or if the loan was going to be sold off to a bigger bank like a Wells Fargo or Chase, or, because those companies will buy a jumbo loan and keep them in their portfolios. We actually have the capacity to keep it at the bank. So a jumbo loan is anything over Freddie Mac and Fannie Mae's conforming loan limit of $766,550, which it's currently for 2024. And so what that means is if you have a home that's on the higher end and you have, 10, 20% down, but your loan amount's going to be above $766,550, that takes you out of the conforming Freddie, Fannie guidelines and loan programs there. And so this opens up a whole new avenue of lending to where we have unique solutions to finance those higher end homes and have a great product for those people looking at properties like that.
And sometimes we get the question of like, where's this magic number coming from?
Mm-hmm. Where does it come from?
66550. And so the housing agencies that are, was structured by Congress to create a mortgage market, with typically when we talk about that, we're talking about Fannie Mae and Freddie Mac. The housing agency involved in this is the FHFA, and they're the agency responsible for setting the loan limit every year. And so they look at average market prices throughout the country. They do an analysis. Every year in November, they set a target conforming loan limit that Fannie and Freddie then allows them to lend up to that limit. Mm-hmm. And so they're giving instructions to the agencies of where the max loan limit for the mass risk and what's nice about Fannie and Freddie is what that market does is it creates consistency so that every day we know that we can securitize that mortgage, and it gives a fluid lending solution across the country for Fannie Mae and Freddie Mac loans, which is very good, which allows for consistency. It allows for lower interest rates. It's a great thing. And when we talk about jumbo, now we're outside of that market. There's then micro markets of like Sam said, certain banks will purchase those, but it's not as a fluid system as like a Fannie and Freddie. And so because of that, you'll see more variations of interest rate. So you might see sometimes where the jumbo rates are considerably higher, and you'll see other times where it's similar. So it moves quite a bit more than the consistency of the Fannie and Freddie mortgages.
Exactly, and that's all kind of based on what each individual bank is setting those rates at, basically for those higher end products. Is it more comfortable for their portfolio at the time to offer that lower rate on a jumbo versus a Freddie Mac or Fannie Mae, or vice versa.
And that can come and go based on the bank's portfolio.
Exactly.
So then you see more variations. It's not as simple as, most banks are at this rate today on a 30-year fix. The average Freddie Mac 30-year fix is this. You're not going to see that on the jumbo side as much. So I think that's the critical thing, is just kind of talking about what that loan amount is, what's the differential. There is underwriting standards that can be different too. So as you go up the price ladder, you can enter in situations where if it's a very expensive home, large loan, sometimes a second appraisal will be required because the risk is so high. Sometimes the credit score, given at different levels, can be a higher level of credit score because the risk to the banking institutions is higher with one concentrated large loan. So sometimes you'll see additional underwriting standards for certain things like credit score, appraisal. There's going to be a lot of review of that because you don't have the securitization of Fannie and Freddie.
A little bit more strict there. And two, what's nice with that is that it's, the bank's guidelines. So we have, they are a little bit more strict, but we do also have those flexibilities if it makes sense to make those deals happen on the jumbo.
And you'll see that's where like asset reserves and other factors can come into play in a more global perspective of looking at that loan.
Building the overall risk profile for the bank and seeing if that makes sense. And what's nice too about our jumbo product is it's a 30-year fixed rate, or we also have an adjustable rate option. So there's a couple different options there. And then in terms of the down payment, it's as little as 10% down on a jumbo, which is huge. And you won't see that a lot with other lenders. Typically the jumbo financing requires a 20% down payment, and we allow as little as 10% down.
And it does have some characteristics too that we offer that I think are a little bit unique. Is we can do it in the manner of an existing home purchase. We could do it in the manner of a renovation. We could do it in the manner of a construction loan. So we have some room there too, which can be flexible to, if you want to build a home in this price range, we have this jumbo product will work for that as well.
So going off of the 10% down with a jumbo product. So sometimes people, who have a little bit of mortgage knowledge, they'll think, okay, jumbo 10% down. Well, that's not 20%. So I'm sure mortgage insurance is required with the jumbo. That might be outrageous, but can you go into a little bit about our product and what we require with mortgage insurance there?
Yeah, so there is no mortgage insurance requirement with 10% down. So that's a huge benefit to our product where, if it is underwritten by Wells Fargo or Chase or a bigger bank, they're going to require 20% down all day long. So mortgage insurance isn't going to be a factor typically on a jumbo loan because the 20% down requirement's either going to be there, or with our product, it just doesn't require it with 10%
in certain situations.
So you have a little bit of flexibility. So maybe you had the funds to do 20% down, but you may have had to get them from investments or something that you really don't want to pull from. So it gives you the flexibility that you can actually put 10% down and you don't have to worry about the mortgage insurance on there either. So really just an awesome product. And when we tell other, realtors or other construction companies about this, they're really kind of blown away when we tell them about it. Like 10% no on mine. They're like, really? No on mine? And we're like, seriously, no. We can do this, and it's huge. Great.
Absolutely. And what I will say too is, if you listen to our episodes before, we're always looking to put our customer in the best position possible. So there are times when we're getting close to that jumbo loan limit, and I told you the variations can, the rate can vary. We're going to present a lot of times we present an alternative and say, okay, well, if you want to do 10% down in this price range, this is the jumbo rate, this is the situation. But you may want to consider, a lot of times we want to get back to the Fannie and Freddie product because most likely than not, it's going to be a lower interest rate.
Yeah.
And so if there's a way to do that, a lot of times the reason someone's doing a jumbo and maybe it only has 10% is because maybe they're selling their existing house. Maybe they're waiting on a quarterly bonus. Maybe they just don't have the funds this minute. So a lot of times we'll structure a first and second combination purchase to keep us under the jumbo loan limit. And then 6 months down the road, they can pay that second mortgage off or reduce that second mortgage dramatically, puts them in a better long-term position, which is always what we're trying to accomplish.
Yeah.
Is put you in a better long-term position.
Absolutely. And that first second combo, so it's actually you're using two separate mortgages to purchase the home, where the first one we can keep you at that Fannie or Freddie limit of the $766,550, and then whatever that difference is, we would do as a second mortgage. So you'd have two payments, two separate loans starting off. But like Joe said, if you're have a home to sell and you know there's going to be some cash coming from that, you can just turn around and pay that second mortgage off, and that's a way to kind of leverage leverage not putting so much down to start off and putting you in those better positions.
And also by doing that, when we get into the Fannie Freddie world, there is mortgage insurance if you don't put 20% down. But a lot of times we can structure that first and second. So we're keeping that first lien under 80, second lien's over 80, maybe up to 90, and we avoid the mortgage insurance that way. So it makes it, again, we're not just looking at the transaction. We're trying to set you up for the best, efficient, effective mortgage that meets the short-term and long-term goals. And a lot of times we can do that, and it's a pain.
Yeah. No, it's not. It's really just a simple
It can be. It can be.
A couple clicks of a button.
But it's nice to structure it so that you don't 6 months from now you don't have to come back and say, okay, I got to remove this mortgage insurance. How do I have to go through this process? I'm worried about it, or I got to do a whole new refinance and be exposed to all these costs again and the interest rate environment again. No, we like to control it and put you in the best position possible.
And that's stuff you talk about up front before they make the offer, get the accepted offer, and go through the process. You already kind of have that hashed out up front. And then one thing that we didn't mention previously is that this jumbo product can be used for a primary residence or a second home.
Yep.
So that's a huge benefit as well. If you're out there shopping for a second home, there's, a good product with a higher price range that we can help out with there.
So if you're looking for a second home in, let's say Florida area, most often a lot of those homes that you're going to be looking at are going to be getting into that jumbo pricing. So that's where it's really important. And that's where, if you're buying in Florida, that second home, getting into jumbo, lots of times people don't really know what that process is going to look like.
Right.
Is it the same process that I went through on my first mortgage that was conventional? So really not much different there. We have some different solutions, but the whole process as a whole isn't a whole lot different.
Well, and you talked about starting that perspective of looking into that. And I think with this product in particular, a lot of times it's another tool, whether it's our bridge loan or this product, it's another tool, because a lot of times in this price range, a lot of borrowers do want to put 30%, 40, 50% down. And we encourage that. We don't want to do 10% down. If you have the capability, we really want you to put as much down as possible. But it's just another tool so that when it presents itself, maybe the perfect home presents itself, maybe the timing's not perfect for moving your money around. We do want you to be in the best position possible. So sometimes it just makes you feel comfortable taking the next step, knowing that that's an option. You might even execute it this way. We might end up, by the time closing comes around and the timing, you might end up doing a Fannie Mae 30% down, or whatever the case might be. But I think it gives you confidence in making that next step.
Having those creative solutions to make it happen.
That's right.
Definitely. Is there a certain story that comes to mind, or a certain customer success story on a jumbo that maybe someone came in not really knowing a lot about it, but we were really able to help in that scenario? I feel like lately we've been able to help a lot with the first and second, just where rates have been. But Joe, do you have any comments with that?
Yeah, we've had a few like that recently where with the spread and the difference between the Fannie Mae rate and the jumbo rate, and sometimes in this case exceeding almost, getting close to 1% different, depending on the timing. We've had some success of setting up a situation where we're doing that first, we're doing that second, saving them considerable amount of money over, 3 to 5 year period, and setting up that second for success, knowing that they're going to be selling, the one couple I'm thinking about right now, they're going to be selling their house. They needed to secure this house first. They're going to get a great rate on that first mortgage. A few months from now, they're going to pay that off. And is just, when you see that validates the process of making sure you have a good plan, making sure it's well vetted. And we discussed that in advance and gave them a couple options like that, and that was the better option for them.
Definitely.
Yeah, and then I had one recently over the last year where they were with another lender, and the appraisal came in a couple $100,000 low. It was way off. They had hired an appraiser that covered 20 some odd counties and didn't do the greatest a job with it. And they were in that higher category, so they were planning on putting a lot down where they didn't necessarily have to. And so we set them up with our jumbo loan, got a local appraiser on it, and ended up getting them a better interest rate and better deal. And they were able to keep some cash reserves, because they were more comfortable with that versus being, putting so much more into the transaction. So always some good options we have for people out there.
Absolutely. And I'm sure they were confident with the value themselves.
Yeah. Absolutely.
Definitely. So just another great example of, we have so many options. It's not just like a one product for anything. We're always trying to strategize about how we can best make this product fit your future goals and set you up for success. Mm-hmm. We're not just going to tell you, oh, here's our jumbo product. This is the rate, good luck.
Right.
Hope you find the right house and everything goes well. We're going to be there every step of the way. Mm-hmm. As we always say, just to, help you strategize and help, make sure that you're informed even with other products that you may not have known were out there. So that was our jumbo loan. We went over, what qualifies as a jumbo loan, a little bit about the product that you can use it for a primary or secondary home, and went over, a little bit about our customer success stories. So we hope that you found that helpful. If you are going to be in the market for a jumbo loan anytime soon, even if, maybe it's a future goal, just give us a call, contact us. We're happy to help, help you strategize and make the plan about when the best time to purchase and, just go over any questions that you have. So thank you so much for tuning into our episode today of Real Take Real Estate. If you have any questions or comments, please don't hesitate to reach out to us or comment, and we will look forward to having you on our next episode. Thank you so much.